Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, March 15th, and starting with the S&P, new highs. What a surprise, right? 1400 on the actual SPX, the actual S&P 500 index. Let's see if I can type in the right name. Alright, there you go, 1402 is where it closed. Not a big surprise there. Once we got through basically the highs we saw from last year, this little bit of resistance, this 3-day down, and from there it's been, 6 days up, something like that. So pretty impressive nonetheless, and it's made the case that it's really important to stay long this market, or at least be involved. And I have to say, one thing about my positions is they've become more tactical as far as new positions. So if I think there's upside in a name, which I will explain in a little bit, I'll go for more. It will be an option position, and I'll go for more of a short-term, maybe for example, a $5 spread, a call spread. So it's just one of those things. NASDAQ continues to work, continues to push new highs. No reason to not think that it doesn't continue. It's just one of those markets, and the great thing about this is that these markets have a tendency to keep going, and eventually, this will end. But this pullback that we did see here back at the beginning of March, maybe that was all that I shouldn't say this pullback, but really this consolidation in general. This was enough sideways movement to start the next leg higher. Now, I do think that the end, we're closer to the ceiling than we are to any type of floor, but with that said, I'll bring over the monthly chart. Looking at even this week's profile, as long as we hold this 1387 down to 1386 level, we should be okay, and we should look for higher prices. I think I said that last night. If the video ended up working, I have no idea. I got very frustrated, but I said if the S&P can't hold this 1390 level or so, we should see lower prices. Sure enough, we trade back above that. We hold those levels and we make new highs. So it's easy to make call that this market should have no problem moving higher. Just to show the NASDAQ, similar formation. We're consolidating. Well, we're moving higher, but right now we're pretty much consolidating with a slight upward bias. So overall, I think the market still works. You look at Apple. Of course, I have to cover Apple tonight because it hit $600 this morning. Notice it hit $600 this morning, and that was it. It traded as low as 578. So it's important to be careful. There's a little bit of distribution going on in Apple. One thing I do want to say, however, is until we get some type of meaningful reversal where it can stay under 580, I'll bring up this this weekly composite, and I have different chart formation here. Instead of candles, I'm using the Heiken Ash candlesticks, whatever you want to call them. I think they're good for a short-term trend, and they tend to make things easier to read. But really, what you can see here is 383 point of control for the week on Apple. Apple's done a great job of staying above it. We've closed above it. But if we do start to push below it, there will be a lot of liquidation, I assume. And the reason why is because there's no volume between basically current prices and even down towards 560, but really 545. So if you really want to make a stand on Apple, you could be, I would say, daring. But you could be daring and, for example, do the 575 by 550 put spread that expires in April. And I wouldn't be surprised to see Apple trade back down to 550 in that time span. That's really not that, considering the move it's had, that's not that big of a pullback. But you would definitely want to take that off the closer it got to 550. But I do think that the I could be wrong, of course, but I do think that this run that we've seen in Apple is closer to an end than it's been. And I think I said that yesterday in email, and I think I said it this morning also. But what we're seeing in Apple is, it's $600, and then you trade $20 off for the rest. Trade $20 down. That's something to take note of, and just keep watching for profit takers. Amazon, just one thing you want to note, still in the middle of this range, but I have to say that I think this is going to pop, and you would be looking up towards 200 as a potential target, but really you have such great volume back down between 185 and 178. The more this trades here, the more interested I get in taking a shot to the long side. So I would be looking at a spread, maybe the 185 by 195 expiring in April. If that's not enough time, then look out to May and see if you can get some nice, a nice spread there. But I do think that Amazon it looks like it's going to try to make a splurge to the upside. Broadcom, a nice reversal today after yesterday's downdraft. Nearly bought more Broadcom today, but just figured, the position size I have is satisfying enough. I wish I bought more down towards the $35, $36 level, but I didn't, and that's part of trading. So this $38 level on Broadcom, just keep an eye out on it. It's been resistance really since the middle of last year. However, I do still think the mid-40s are a very viable target for Broadcom. XLF, financials in general, continue to power higher. This is impressive, and what we're seeing here is we consolidate, we built a base, and I'm going to get rid of all these lines so you can see this clear. Alright, we've built a base back at the end of last year. We broke out to the upside, and you can see one thing about the whole moving averages. When it started to move up, you can see price was still in the middle of the channel, but the whole moving average was moving up, and it was, easy to see that momentum was turning. But really, once we broke above 13, which was point of control for the past 52 weeks, that was a big deal. And then we got up to 15 to 14.5 on the XLF, big high volume area. It's the biggest high volume, right below, or right under, I should say, this 13 to 12, and we've seen a breakout from those levels. This is impressive, and this is something worth noting. This is a clear sense that people are chasing the financials, whether it's short covering or just a lack of people being long. I'm not sure, but I don't think you take your eye off this ball. I'm late on this, and I'll admit it. If I get a pullback that I think is viable, I will take it, but this is just too extended. I had it, look at JP Morgan up another 2.5% today. I had a call spread 31 by 33 in Wells Fargo that I took off yesterday for a double, but now it's trading at 34. So it just shows you that these names are continuing higher. Look at Bank of America. Bank of America was trading in a tight range for multiple weeks. Looks like almost a month and a half, or you can even call it 2 months, whatever. And then we have 3 big breakouts. Do you want to buy here? No. But what you want to be aware of is this point of control, $8. You can see the power of this point of control. If you catch it on this breakout day, call it $8.20. You can call it $8.24. You've caught a $1 move on a $9 stock in 3 days. Imagine the option prices that have just gone through the roof in that time period. It's without a doubt impressive. And even Citigroup, which I will get to, holding its breakout. This is, I think, looks like you may have a little flag pattern here. Look for an upside breakout, but this this is not my kind of trade setup. If it's yours, if this is, your type of momentum setup, then perhaps you look towards some type of spread, perhaps 36 by 38 call spread, something like that. That you're trying to get a base hit and not a home run. Coal stocks in general had a very nice day today. I actually got involved in Walter Energy. I have not been involved, but I did take a stab at it today. I bought the 62.5 by 67.5 call spread for, I want to say, less than $1. I don't remember though. But I'm long that. It expires in April, and basically what I'm saying is, back at these lows where we've seen countless times, we've always seen a nice bounce in Walter Energy. Why not again? And those are my expectations. Will we get it? I think, and the reason why I bring in the monthly chart and point of control at the bottom end of the range, we're holding last week's point of control. We're above this week's point of control. We have a little bit of resistance here at 62.5. This was the reason why I did the 62.5 as far as buying. I want to participate above this level, and I want to look to lock in profits basically where the top of this congestion level back a couple weeks ago. And that's just, it's a base hit. And my thesis is that, Walter Energy from $76, $77 down to $57, it's based. We've had nice volume down at the bottom end of the range. Now we're holding it. Now we're making higher lows. Now we need to see the breakout up 3% today. That's a pretty nice day. However, these names are volatile. Alpha Natural Resources, another one. You could take a cheap shot on this. Just like Peabody Energy, which made a new low today. This is interesting. They made a new low today and then closed above every single, all but this wick up here, this intraday high on the 9th, closed above all of these days. So this looks like this is about to take a ride up towards $34 or so, 35 even. And if that's the case, 32 by 34 call spreads, you can probably buy it for 75 cents out in April, and I'm sure that position will be profitable. Freeport hung in there today, still not doing that well, still looking for a bounce, but not giving up on it yet. It's at the bottom end of the range, kind of looks ugly, kind of looks scary, but until it breaks, I'm sticking with this trade. It's not a big deal if it breaks and I get stopped out. Ford, the only thing I want to say is watch out. We had a little bit of selling pressure at the top end of this range, and if we do get some type of pullback, what you'd want to see is some type of higher low, perhaps off this 50-day moving average, and a move to the upside, breakout to new highs above 13. ConocoPhillips finally got a pullback. Be careful on this. I talked about it in last night's video. I'm really sorry if it ended up producing. Holding what looks like 2 weeks, let's see, 1, 2, 3, 4 weeks ago, the point of control from there. If we start to break those lows, definitely want to sell half. But 77, you're probably going to see resistance, and you're probably going to see a little bit of selling pressure. You have a lot of activity above 77, and we broke that today. So I don't think this uptrend's over, but at the same time, we could easily have a pullback back down to the low 70s. Nothing would really be wrong with ConocoPhillips, and I don't want to see you give up those gains. Okay, it's definitely warranted. We need to talk about the transports, which had a huge day today, outperformed the market. Look at this volume. I mean, incredible. And up 3 1/3% today. Back up at the top end of the range. Can you buy it here? Hard to say that because of the move it made today. But you look at names like CSX, up 8.5%. You look at names like Union Pacific, up 5%. You look at names like Kansas City Southern, up 5%. And if you believe in these names, then you're going to be looking to get involved on any type of weakness. If you see the market continue to bid these names higher, then you perhaps want to start scaling into some of these. If I had to choose, I'd look at Kansas City or Union Pacific. They're the best fundamentally, and just something to point out. All right, let's look at the euro, the dollar, gold, silver, oil, and then I'm going to leave it at that. The euro, for some reason I have this highlighted down at these lows. We're bouncing there, so maybe it has some significance. But what I'll do is bring over the hourly chart for the last 30 days, and what we're seeing here is a failure against point of control for the last 30 days, point of control for last week, this week. Be careful. We need to get above 131.5 to really give us an all clear back to the upside. If we don't get that, euro's probably going further down. Dollar, on the other hand, is rallying. Let's look at it on the daily, back at the top end of the range. So this move to the bottom end of the channel that we saw that looked to be a buying opportunity ended up being just that. And what I'm going to do is bring up the monthly composites, this good old chart. And what we saw here was a test of November's point of control. We held it once, moved back higher, failed against January's point of control, moved lower, pierced it. But what happened immediately after that piercing? We had a complete reversal, consolidation above February's point of control, and then a move up towards January's, more consolidation, and then a breakout. It looks like it's going higher, but I do think this is more range bound, not necessarily thinking you have to be all over the long dollar story, but I do think it's important to have cash in your portfolio, and that's just something to be aware of. Gold, on the other hand, which I'm going to delete these shruggings too, it's at the bottom end of the channel. We got a little bounce today, oversold bounce, probably shorts taking their profits, but you can see what we do. We broke down point of control to 1723 level. We traded below it. We couldn't get it back above it. We got to flush down. These are the kind of trades you're looking for. I have to be honest, gold looks a little scary right now. It looks like there could be some more liquidation, and I would hate to say that this uptrend is over, because it's probably not, but we're definitely not uptrending right now, and that's something to take note of. Looking at it on monthly scales, February's point of control way up at 1700, March 1700, February 1725, January 1657. We pierced that, and now we're testing that. If we can hold current levels, we'll probably push back up towards 1700, where you'll see you may see people start to liquidate again. Bringing it up on a 30-day scale with weekly composites, we have the weekly composite down at the bottom end of the range, so that supports a short-term long play to the upside. And like I said, your target would be 1700, maybe even 1675 or so, which isn't that great of a trade. But if we do push up towards 1700, which I think there could be a possibility of, then the trade's not too bad. I would use this. I would trade this, I should say, using GLD, and I would be looking for some type of call spread, looking at maybe currently trading at 161, maybe the 162 by 165 call spread expiring in April or something like that, if you want to look for some type of short-term bounce trade. Silver, value area low, that's interesting, and that's something that I think is worth taking note of. However, it's hard to be convinced that this thing wants to go higher. What we've seen is 3 major lower highs, and until this pattern changes, this could easily go back down to the mid-20s. Alright, crude oil had a pretty volatile session today after government saying something about releasing oil reserves and then it not. I have no idea. Don't trade crude. All I do is watch it. I can point out the longer term trend. I can point out the shorter term trend, but I could care less because I don't trade it. What we're really seeing is a bounce off of this breakout level. If we hold these levels, it looks good from a technical standpoint. However, looking at it on a weekly basis, that's all we're really doing is holding the breakout level. And if we do break 104 with some type of convincing sell-off, we're going down to 102, which isn't that big of a move, but it's a move. And from there, we could push back down towards 100, even down towards 99 to 98. There's a little bit of resistance overhead right now. Basically, 3 weeks in a row, point of control is at the top end of the range, and it's really been easier to be a seller than a buyer, and that's just the truth. If we get back above 107 or so, we'll probably go test the highs. I wouldn't be surprised if we made new highs. So really, that's it. Few trading ideas there. I would stay away from the financials trade unless if you're in it. If you're in it, pat yourself on the back. You got the best trade of the year, and I have to admit I was not part of it. I scalped some of them. I have to say, was a part of. Let me see if I can get it up on the screen. Oh, look at this. Bank of New York Mellon. I actually said I took profits in this the other day. Took all the profits now. This is the first time I've looked at this. Up 4 almost 5% today. Kind of kicking myself. You know, that's trading and that's part of it. You're catching it, you know, live here, my commentary. So, whatever. That's why we trade. That's why we're human. I wanted to take the profits while I had them. And so anyways, take care, have a good night, and I'll talk to you tomorrow.